Wagwan guys, welcome back to my YouTube channel. It's still your boy Certified Brainer, aka Brainer FX, and only one brainer, you know the vibe. So basically in today's video, I'll be explaining how I was able to take this trade setup of over 1:30 RR. I'm sure you must have seen it on the thumbnail or on the description. Yes, I'm going to be, breaking them down step by step. So if you're new to this channel or you're just seeing my content or my video for the first time, do well to subscribe, turn on the notification bell, like and share to your friends and family. So I want you guys to, settle down, get your pen and paper, because what I'm about to teach you is going to change your trading game. Trust me. So without further ado and enough of all the talk, let's get right into the video. All right, welcome back guys. So I'm going to be faking all of this out, but before I do that, let me explain something to you guys real quick. In the market, you need to understand the market intent. And what do I mean by the market intent? It simply means if the market will be buying or selling, you need to understand where the market is heading to. Is it heading to A? Is it heading to B? Like, you need to know the direction. Most people call it directional bias. So you need to frame that bias first. And as a day trader, we do that from our higher time frame. The likes of the daily time frame, the 4-hour time frame. And most of my entries, I take them from 15 minutes. You can take yours from 5 minutes, 1 minute. All right. So I'm just going to give you guys a scenario before I, take off all of this and start explaining. Now, your higher time frame is very, very important. Okay, that's where you get your key levels, your areas of supply and demand, your support and resistance. These are levels that hold water. These are levels that hold. Okay, and knowing the direction of the market, regardless of the POI, you don't take entry from there. Okay, you just mark them out. All right. So let's take, for instance, you have something like this. The market is bearish, but market is creating higher highs and higher low, higher high, higher low, higher high, higher low, higher high. And then eventually it gets to your POI, your higher time frame POI. Remember, and market creates something like this, right? Boom, this is all you need to ride the market. Now I'm going to explain this so you get a better understanding. All you want to see is a sweep, right? So let me just mark that real quick. A sweep, okay, and a market structure shifts around the zone. A market structure shift. Boom. And you take your entry either from a breakout block, an order block, a fair value gap, around somewhere here, and you ride the market to the downside towards this point here. So I'm going to be showing you the chart example, of how I was able to take that trade. But trust me, if you do this alone, you are going to become so profitable. Like, don't focus on all this random stuff, okay? This is real gem I'm giving to you guys. So I'm going to explain this sweep to you. Now you can say this is a break of structure because this is a break of structure, right? And you might want to take this as well as a break of structure. But why did I call it a sweep? That is because the candle that breaks this high does not close above it. It wicks below. You must understand this, guys. It wicks above and close below. Okay, that is why here is a sweep. That is your first confirmation. When price is around your POI, you get, and immediately that is done, market takes high the recent higher low, that is supposed to be protected, creating a market structure shift. Honestly, guys, this is something most people won't teach you for free. They will charge you for it, but I'm teaching you guys for free because I want you to be profitable. Okay, if you do this alone in your trading, you come back to the comment section and give your testimony on that. So I'm just going to be showing you guys on the market now, and note here is a liquidity, a trend line liquidity. For sure market to definitely come to take out this liquidity, because what really moves the market is liquidity. That's areas where money, they are resting at. So this is just a scenario. I hope you guys understand. So let me just show you real quick of how I was able to get this trade set up. That concept was how I was able to get this first trade. So I said I was going to take all of this out. So let me just delete them real quick and show you guys something. Okay. So now this box here was drawn from a higher time frame. I said your higher time frame is key. These are areas where you draw your supply, your demand. It can be an order block, it can be a breakout block, it can be a fair value gap. It can be a mitigation block. Okay, so this is what I'm trying to explain from that diagram above, where you have your higher high, your higher low, right? Another higher high, yes, because it's higher than this previous high. Your higher low, you have your higher high, and here we have the sweep. I'm going to explain. Hold on. Your market structure shift, mitigation into your POI, then boom, 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 market will ride to the downside. So let me zoom this in so that I can properly explain. Okay, so I'll take this diagram out. Now here is a break of structure, like the obvious one. You can see a break of structure, right? Market is supposed to create another break of structure in order to continue that uptrend. But remember, you have an higher time frame POI. Let's take for instance a 4-hour POI. The immediately market mitigates this POI. Instead of breaking above this high, it created a sweep. What I'm trying to explain to you guys in that diagram, note the candle did not close above, it only wicked above this high, then closed below. So I'm going to use my sign, an X sign. That is a sweep. Now, using the concept of fractal structure, I don't go below 15 minutes. You can take entries from 5 minutes where you get to see the structure clear. But I've trained my eyes to see all these things. That is why I take most of my entries from 15 minutes. But as a beginner, trying to still understand structure, you can then go to the lower time frame to see your structure clearly. Those minor structure, those fractal structure. So immediately the sweep happened here, you will notice there's a market structure shift here. You might not be able to really spot it, probably because you've not trained your eyes. That's why I say you can go down to the lower time frame, like the 5 minutes, 3 minutes, okay? But you need to be experienced to use most of these time frames. That is a fractal structure, market structure shift, MSS. Then remember what I said, market broke this, creating a market structure shift, came back up to mitigate. Oh my yes. Okay. Came back up to mitigate an area of interest. It can be your breakup block, your order block, or fair value gap. Alright. You take your entry from there, then you ride the markets to the downside. Now, because this was the last swing low that was created, that is why I placed my TP here. Bam. And this is a 1:9 RR. It was about 9.25 thereabout. So how was I able to catch the second trade setup? Let's take for instance you missed this first entry, okay? if you're a beginner, right, you most probably wait for this swing low, or recent higher low to get taken out, right? Which is actually correct, because it really confirms that the market is bearish and want to trend down. Okay, but your entry without liquidity, I said something that liquidity moves the market. Now, market came around this zone, somewhere around here, and sold off, right? But trust me, I said something about real intent of the market. Like, this sell here was just an engineered sell, to trick the early sellers before taking them out. They'll become the liquidity later. Why was this sell not valid? Although you can actually capitalize on this short sell to either scalp in, scalp out, and make your quick profit, okay? But I won't take this sell. Why? Because after this break of structure, fine, there was no liquidity created. I hope you guys understand. There was no liquidity created. Instead, this created the liquidity. I can mark it out as my liquidity. But even before this move, I've already gotten my entry. So using the fractal structure, let me come back to this first entry. This was the recent break of structure. Here was a fractal structure break, like a break of structure. Here was another break of structure. You can see this more clearly on the lower time frame, but I've trained my eyes to see this minor structures, on 15 minutes. And here the third final break of structure that really confirms the move to the downside. Now, there are different ways you take your entry. Either you use your breaker block, your order block, or your fair value gap. But honestly, I don't really use breaker block. I only basically focus on order block or fair value gap. And when we talk about fair value gap, we are talking about area of imbalance. We are talking about imbalance in the market. And these are things you guys need to understand. In my subsequent videos, I'll be doing more explanation on these things. When the market creates an area of imbalance, market must definitely come back to those areas of imbalance to balance itself before continuing its move. It is just logical to think of it that way, because this place is imbalance. Market will come back to those areas to balance itself, okay? Because it's not stable. It will come back to balance itself before making a true move. So if you look closely here, after this break of structure, there is no point of interest here. Even if there would be, it is not valid, because this has already been mitigated. We took our first entry here. Now this second break of structure is here, and in between here you can see a fair value gap. For those of you that don't know what fair value gap is, it's just 3 candles. I might also create a video explaining this on its own. You can use this to take your entry. This is a fair value gap, and immediately after the fair value gap, you have what we call your inducement. Most people call it liquidity. Whatever you choose to call it is fine. This is your liquidity or inducement. So it makes this fair value gap valid, because this is our point of interest. It has a liquidity or inducement. So I will likely take my next entry from here. That is why I took my entry from this place and not from here. This first one that caused the break of structure, because this one does not have liquidity. Liquidity moves the market, remember guys, right? And as you can see, sniper move. So you can take the whole of this place as liquidity, like this. Okay, so let me just give that a sign. Liquidity or inducement, you get. So I'll most probably just leave it like this. This is the recent one I'm focused on. That was how I took my second entry. around here, boom, and you place your SL just above it. But I give room to my SL, I just allow my SL to breathe. In as much as most of my trade are, sniper entries, but sometimes just let them breathe, okay? So you can decide to take your entry from here, but because I have the understanding that markets is coming to this swing low, that is why I kept my second TP here. I hope you guys are following. And for the third entry, I may not necessarily explain it in this video. It is kind of complex, okay? But I'm sure you are able to pick one or two things from this entry, this this explanation I made. And okay, I might just give a hint on the third entry. Market kept on creating, a break of structure. And for what most of you know, as market break, let's say like this, break and retests. Let me draw this very well. Okay, let me take this out. That second entry was taken around here, somewhere here, but I might not be explaining it here in this video. But the concept used there was the concept of break and retest. Okay, that's when market break a particular point, comes back to retest and boom boom boom, close down. But it is not your normal break and retest concept that you all know. It is way more advanced than that, because if you are to use that, you would definitely say market will, okay, let's say market broke this place, will come back to retest a zone here, or probably retest this line here. Okay, but with these two entries that I showed you guys, I'm sure you must have been able to pick one or two things from here. And so this will be the end of this video. I'll be making more educative videos on your entries, and if there's anything you need clarity on, drop your comments in the comment section. If you actually want me to talk on something you don't understand, just let me know. And I hope you guys found this video helpful, and I wish you all the best in your trading journey. See you guys in my next video. Bye for now, and don't forget, subscribe and leave a like. Okay, bye guys.